Joining me right now, George Tsilis, senior markets correspondent, taking a look here at these markets, which have some down arrows after record closes yesterday. Good morning, George.
Morning, Nicole. Well, looking at the overall markets, we talked about this yesterday, how we're sort of running out of momentum, not necessarily a bad thing. I think if we consider the S&P, broadly speaking, it's still trending above its 20-day moving average, which has been the case since about the third week of April. So for what it's worth, that trend is overall still intact. I think the market is still looking or is absent of a catalyst right now, considering we have mega cap earnings, which could be a positive catalyst, or it could certainly be a corrective catalyst for the markets, because some would say perhaps a short-term correction is healthy and, of course, going to happen at some point in time. But, I mean, overall, the markets are still trending to the upside. If you look at the dollar is still significantly lower than where it was on a year-to-date basis, down about 10%, trending below its 50-day moving average. I think right now, if you just take the context of what's happened in this last year, at the very least in the last 6 months, obviously, if you look at sector performance, we're seeing the industrial space, the best performer year to date, at the very least, up about 15%. And some of the laggards, which may end up picking up some rotation from institutional investors, include the ones you mentioned, like healthcare, which is down about 5%. But I think overall, irrespective of interest rate environment, we are seeing essentially a healthy market. And I think this is a function of what's happening, fiscal wise. But at the same time, we can also see that the dollar weakness is really increasing non-residential fixed investment spending. And I think that's indicative of what we're seeing in other areas of the country, like emerging markets. China is looking at potentially breaking to the upside, irrespective of what's happened with tariffs. But the dollar weakness is really a proxy of funding flows for international investment. So international investment spending is still very strong, and demand for investment is still strong, and that's why these markets continue to ramp up.
Yeah, and look, Michelle Gibley, we just had a great conversation with Michelle. She was talking about the excitement that she's seeing in Europe pertaining to there could be new growth in Europe overall. She talked about the fiscal spending that they're doing in Germany, for example, infrastructure, defense spending, that it could be a new time for Europe because they have to, and so that could give them a boost. So very interesting there. When you look at the 10-year bond yield, which right now is sitting at 437, some of your thoughts there. There was a guest yesterday who said not interested in the long bond, that's for sure. Your thoughts?
Well, I mean, if you want to consider what it tells us, I mean, right now, the 10-year yield is really a proxy of, the summation of inflation and GDP. And so right around the 4.3% range. In the last 2 years, markets have been higher, going back to the correction we had in 2022. But since then, interest rates have been higher, markets have been higher. So we have to think about, what's happening in the context of inflation. There's still inflation as a problem. It does signify there's demand for investment because everyone really focuses too much on the consumption side of interest rates. But the 10-year yield has really just been in a trading range. We're stuck right in the middle of it. It's between 3.8 and 4.8%. So right now we're right in the middle. 100 basis point trading range, but the markets still continue the upside. So my point is everyone's looking for the Fed as some sort of panacea, maybe a panacea if economic conditions get worse. But the fiscal flows, both internationally and domestically, have been really a substitute for tightness in monetary policy. So maybe the Fed waiting and having waited for this long isn't necessarily a bad thing, because again, looking at 10-year yields, they've been higher for the last 2 years, and the markets have been higher as well.
Yeah, Michelle mentioned this too, but this is coming in sort of like breaking news. Michelle had it moments ago that the U.S. is likely to extend the trade deadline for the talks with China to August 12th now. Does that give us a boost or a sense of relief?
I think so. I just think we've got a few catalysts, and they could be bad ones or good ones. But we have the Fed next week. We have to be mindful of that. Also, mega cap earnings, because right now, with the daily ranges or the variance from high to low on a daily basis, that they're a lot less than they were going back to April, where we saw those major, multi-percent gains and losses on a daily basis. So moving to the upside will require some catalyst, and it could be, of course, some trade deal relief, extensions, negotiations, mega cap earnings, and the results of those earnings, not necessarily in terms of beating and raising guidance, but the answer is if the reaction, if the price action tells us that the stocks are moving higher based on better guidance or best on earnings, then we may end up continuing higher. I think if you look at the measured move, going back from February highs to April lows, it's possible we hit 6,800 in the next several months. So I'm just saying that we're trending higher. We're in a melt-up environment. Investment spending is still very strong, but there is a risk in the long run of overinvestment, and that's been the case in many times in the past where we've seen cycle tops and then, of course, corrections.
Yeah, quick thought on Bitcoin here. I mean, we're seeing the high that was 123,615 recently, still holding right just below the 120,000 mark. I mean, it really has been incredible. What a run. It's up 87% in 1 year. Thoughts on Bitcoin? People still hot on Bitcoin? What are you hearing?
Well, I just use it as a risk-on proxy. I mean, it broke out, I believe it was on the 10th of July from around $112. So after the breakout, there's a breakout and continuation on Bitcoin. One could say maybe that's a sign that there's a lot of frothiness in the markets, but, for what it's worth, I think it's still, a sign that there's willingness to make investment. And again, typically the markets will follow, especially the technology sector, Bitcoin, and it recently broke out, and so it could be a proxy for what we may end up seeing with the mega cap earnings coming out soon. But again, we have to look at the follow through. It's not just one day move that makes a trend or a trend continuation. The follow through post those earnings coming up in the next couple of weeks is going to be quite important, I'd suggest, for the continuation.
Yeah, I mean, and we've seen XRP surging and Ethereum, so it's been an exciting group, crypto overall. George Tsilis, great to see you. Thank you so much.